Thank you all. It's good to be back in Perth for Good Oil, coming from Melbourne. It's been a good 3 years since I've been able to come over here. I'd like to take you through Q Energy presentation today, and if I was a marketing person, I might change the heading and you might be seeing something like the new Q 2.0, because what I'm going to take you through is a scale change in Q in FY22 that's sustainable over the next short term. We'll go back, and this will be published on the ASX, so I encourage you to take some time to read the disclaimers along with the presentation. So Q had a scale change in FY22. We had organic growth from our Mahato PSC in Indonesia, oil production, which we'll take you through, and we acquired interests in the Amadeus Basin assets previously owned by Central Petroleum. So we have high cash generating abilities at the moment, and we'll see that through our revenue last year, and it's likely to continue into next year as we have near-term development options at our existing assets. We'll see our portfolio is diverse, with 7 projects, all contributing revenue over 4 geographic areas, and a good mix of oil and gas. Market cap was about 47 million at the end of August. You'll see we have an EBITDAX multiple of 1.6, and you will see on the next slide that our revenue is slightly under our market cap, which is an interesting position. So in FY 2022, Q had $44.4 million of revenue. From that, $29 million EBITDAX, good cash generation. We had production of over 600 barrels of oil equivalent. High margin oil, and we recorded a profit of 16.1 million. All the green arrows there pointing upwards, showing the scale change during the year, and expect that to continue as a sustainable change for the company. As I said, we have 7 revenue producing assets in 4 geographic areas. If we start from the bottom corner, the Maari Manaia fields in offshore New Zealand, oil production, FPSO shipped to the east coast of Australia. We've been in the field for a long time, and it keeps producing and still giving good results, especially at these oil prices. Our newest acquisition is in Central Australia there, the Mereenie, Palm Valley and Dingo fields, where Central Petroleum is the operator, and Q acquired between 7.5% and 15% of these fields in October 2021. We have 2 producing areas in Indonesia. The Sampang PSC is a gas production. It's been a long time project for Q, continuously gives good results. Gas into power plant in Indonesia, replacing coal, just as Martin pointed out, helping energy to get in the right sustainable way to Indonesia. And our newest project is the Mahato PSC, which contains a PB oil field, and we'll get into some detail about that later. This is our growth engine. In 18 months, it's gone from 0 to 5,500 barrels a day and will continue. Provides the bulk of Q's revenue last year and going into the near term as well. Good mix of gas and oil. 7 different independent production projects in 4 geographic regions. That drives us to our annual revenue last year of $44.4 million. As you can see from the chart, a significant change from the previous 5 years, driven by the organic growth and the acquisition of the Central Australian assets. Indonesia contributed the most there, $27 million, up. Mahato itself, our PB field, is 15 million, up from 2 million the year before. And the chart there shows indicative growth in the near term, and that's revenue growth that's going to come from wells that are already planned in Indonesia, wells that are already planned and happening in Central Australia. We again also see the support for the oil and gas prices that will help us with this sustained revenue. Revenue comes from the barrels we produce. We produced over 600,000 barrels of oil equivalent last year, up 60% from the year before, Again, the growth expected to continue as we drill more wells in both Indonesia and Central Australia. Indonesia was the largest area for production geographically, and 65% of our production came from gas. So that's Q in a nutshell, our PB field, where we've got producing wells in the front and a rig continuously drilling in the background there. This is our growth engine for Q. Now the Mahato PSC is in central Sumatra, a stone's throw from Minasanduri billion barrel fields. The PB field was discovered about 2 years ago by our exploration wells and now contributes $15 million a year to Q last year. It's a large resource. We recorded at 93 million barrels of oil in place, 21 odd million gross recoverable, and there are nearby fields that do get higher recoverable rates than that over their 30 to 40 year lifespans. The map we're seeing there shows 10 wells in green, which are the wells already drilled, and they contributed to our revenue last year. And that's about 5,500 barrels a day field production. And the growth story is the pink dots. That's 10 more wells that we've got approval for, the rig's in place, we've already started drilling, and these will be drilled next year. As you can see, the field, we're moving north, and the dots move north while we gather the extent of the field. So the northern boundary of the schematic is still slightly unknown as we look forward to moving north with the wells. And as we move forward and drill wells at a rate of 1 a month, and the first 2 wells were drilled in June and July of this campaign, came in at 1,000 barrels a day and 800 barrels a day. And we're going to drill 1 well a month for the next 10 months. I'm currently drilling PB21, the next well. It's into the same reservoir, well known now. There's almost a dozen holes in it. We know what we can expect. And what we can expect is shown in that schematic there. Within 12 months, we'll have drilled 10 wells and have the potential to double the oil production coming out of the PB field. The wells are 5,000 to 7,000 feet, go from spud to production in a month, get Brent price, are connected to existing production, existing transport. This is the growth of Q in the near term. Also in Indonesia, our Sampang PSC. That's a picture of our Grati gas plant, which processes Sampang gas into Indonesian power. Another growth area. So the current fields, Oyong Wortel, gave us $12 million of revenue last year from long-term gas contracts. Very predictable long-term gas. The growth here is at Paus Biru gas development. Now, Paus Biru was a gas discovery a couple of years ago. FID is expected in the coming months. It's been slightly delayed through Indonesian approvals and COVID getting in the way. It's a simple, single wellhead platform to the existing Oyong infrastructure and export infrastructure. Expect first gas by 2025 at a rate of 20 to 25 million a day. FID expected soon, on the tail end of getting approvals here. In Central Australia, currently drilling PV12 in the Palm Valley field in the Amadeus Basin. So we bought into the Amadeus Basin through Central Petroleum, which completed in October 2021. Brought in $8 million of revenue for those 3 quarters of last year. So expect full 4 quarters of revenue into FY 2023. Fields are connected to the East Coast grid. You'll see the pipeline connections there. We were able to sell contract, and we have contracted gas and spot gas, able to take advantage of the high prices early in the year, and there's also market price for condensate that comes out of Marini field. The growth opportunities here are right upon us as well. We're currently drilling the PV12 well in Palm Valley, which we'll talk about a bit more in a second. There's 6 Marini recompletions to be undertaken in the next 6 months, and 2 more development wells at Marini that are being planned by the joint venture. So 2 more development wells and 6 recompletions to add to the Marini production of gas to get more supply to the East Coast markets, which are, as we've heard and we'll keep hearing, strong demand and expected to continue. We're currently drilling the PV12 well in Palm Valley. It's been drilling since April this year, and the original target was a deep exploration target in the Arambera sandstone. The drilling got pretty hard, and we had to cease drilling the vertical section of the well, just weren't getting anywhere. We changed the program to have a horizontal a lateral into the Pakuta P2, P3 sandstones there. Again, not very successful. We encountered water, so have pulled back and plugged that. And as of yesterday, or this morning announcement, we've now started drilling into the Pakuta P1, a lateral. Now the P1 is a producing field in the Palm Valley area. So there's hopes that that will be producing in this area as well. And it's all connected into the Palm Valley and Marini processing and pipeline infrastructure. So any gas will get to market very quickly. Maari has been in the Q portfolio for quite some time and continues to produce good revenue and good results, especially at the oil prices we're seeing at the moment. The current production is about 3,500 barrels a day. We have 3 wells offline, so expect that in the coming months to increase. We've got a couple of workovers that are happening, but Maari continues to be a reliable producer of oil. Q's committed to our sustainability. It's too much to go through here, but I encourage you to look at our climate change policy, and we report under TCFD guidelines in our annual report. They're all on our website, and will be updated with our annual report in the coming weeks. So this is our pipeline of opportunities in a nutshell. That's between now and the end of FY23. There's at least 12 development wells there that Q will participate in, well recompletions, and an FID for a gas development. This is the growth, sustainable growth that Q has experienced in the last financial year that will continue. And so why Q Energy? I said, again, I would have liked to maybe put the new Q 2.0. We're a changed company in FY22. 4 geographical production zones, 7 revenue producing projects, all diversified through geography and product. Our results are strong, $44 million. We doubled our revenue in the last financial year and expect that to continue from our existing projects and developments. We're exposed to high demand markets. East Coast Australia gas expected to continue to be high demand. The Amadeus assets are linked into the East Coast. We're exposed to oil through Maari and Mahato, leverage to the high oil prices we expect to continue. And these projects get plus or minus Brent and a premium. And we have near-term growth from our existing assets. 12 plus development wells drilled in the next 11 months. Mahato wells, 1 a month. Current history has 800 and 1,000 barrels a day from the wells. Expecting that to continue, doubles the field production from Mahato, contributing straight to our bottom line revenue. Thank you for your attention. We have a booth out in the area to have a look at some photos and come and have a chat if you're available later on. Thank you, Peter.
Thanks, Mark.